Hello and welcome to the GoNoGo show here on Thursday, November 10th, 2022. How are you, my friend Alex Cole? What's shaking?
I'm doing very well. Fairly bullish day today in the markets, but we'll get to that.
Extremely bullish day. Hopefully you filled out your bracket correctly for the midterm elections and your fantasy football Congress team is going to take you to the finish line. I can't tell you how many analysts I have read or heard talking about their predictions based on potential outcomes from election. I know politicians matter, but certainly as investors trying to forecast what was going to come, how this was going to play out, or even if you had the crystal ball and knew exactly how the elections would play out, how would you know how the markets would react to that information?
But even then, we don't really know. The Congress is still up for grabs, and they're not 100% sure which way it's going to go. But then I think it's more the inflation numbers coming out today that have really shaped people's reactions. So I think that all the talk was about the midterms, and if the Republicans gain a lot of seats, then what does that mean? Or if they don't, what does that mean? And then really, I don't think the market's that fussed about that, and the inflation numbers have been more important.
Absolutely. Inflation numbers coming in at 7.7% today. But again, right, we know all of these things matter. We just don't know how and when, right? Yeah. Which is why we focus on price. It's only the price that pays. And frankly, we don't want to go on that fool's errand of forecasting. So, Alex, let's dive into some go-no-go charts and let's talk about what is actually happening in the markets, starting from our top-down perspective on this go-no-go cross-asset heat map. A couple of really important changes afoot. Walk us through what we're seeing from a trend perspective.
Yeah, we are seeing the beginnings of some real change happening here from two sides. Really, the most, I guess, the one that people focus on the most is going to be the equities, who tried to get into a go trend last week, and then really this week. Now we're going to look at the charts in a minute. We see it strengthening. We're seeing strong blue bars. We'll talk about that trend continuation that we're seeing as well. And then the other really, really big move for me that we've been really watching lately is the dollar and how the dollar has been continuing to hold up. Well, it hasn't now this week. We saw it roll over earlier in the week, and of course now today dropping even further. So a strong no-go trend on the dollar. And of course the third panel, which has been there now for a week or so, the commodities back in a go trend.
Absolutely. Those major inflection points, and perhaps what we're witnessing is the birth of a new bull market. As in nature, the birth of a bull in the markets can be a messy but beautiful affair. So, Alex, let's move on from this cross-asset heat map, and let's take a look at the S&P 500. Look at that price action today, gapping up over 5% so far on today's trading. What are you seeing from a trend perspective on this daily time frame?
Well, as you said, they can be a little bit messy when they begin, especially when you're looking at trend. But our favorite setups, you're seeing this happen here. We saw that the oscillator broke above the zero line ahead of the trend indicator changing its colors, and that told us that this no-go correction wasn't really very strong. We saw some positive momentum from the oscillator. We also talked about this bullish divergence that we saw a couple of weeks ago. But then now we came right back down to that zero line, and we were talking about how as we come back and cool off, what's going to happen here at the zero line? Will we crash back through it? And then, of course, we would see the no-go continue, or would we find support? And it looks like now we're on the right side of zero, and we're finding support. And that led to the colors coming back to the go colors, the strong blue and the aqua. And even now today, breaking above zero, out of a small squeeze, go-no-go squeeze here, giving us trend continuation. So this time now we're being able to say that the trend is in place and we're getting momentum in the direction of this new go trend. So this is a really bullish happening here over on the right side.
Absolutely. And just a quick review for all of our viewers here on StockCharts TV. or if you're watching this on YouTube, those colors that we're seeing in the price panel on the top are the composite blend of many, many, many technical indicators. Alex and I believe in following the weight of the evidence approach, meaning that no one indicator on its own is going to offer a silver bullet. But when you start to go through your checklist as a trend follower, you see that multiple indicators are moving in the background. And so that computation happens off screen. What we want to present to ourselves as traders is a very simple view. We want to avoid that analysis paralysis. So here we are in bright blue. That's the strongest form of a go trend condition. And that correlation between what's happening in the price panel and what's happening in the GoNoGo oscillator in that lower panel, showing us the resurgence of momentum in the direction of the trend, right? Came back down to zero, retested for support. And again, we're seeing momentum in the direction of the buyers, positive momentum. Alex, let's talk through this chart for a second, right? We had a relief rally over the summer, late July into August. We broke into the go trend conditions on this daily basis. From your perspective right here, where do you see resistance levels? What should we be looking for in terms of the first stop on this bullish train that we're on?
Yeah, well, another thing to keep in mind is that if you look at multi-time frame analysis, during this period, the weekly chart stayed as a no-go. So we're going to zoom out, of course, in our analysis and take a look at that weekly chart, and we can see that it is still a no-go. And at an inflection point, we've got the oscillator testing zero on that weekly chart, but from below. So for this to be more constructive than what we saw in the summer, we'd have to see that weekly chart confirm. But you can see that in this medium term, sort of intermediate swing, we're getting higher lows than we had down here, and we are breaking above this short-term higher high. So if we can set a new high in here, then we're definitely in a smaller time frame go trend. You see resistance at sort of this level here, where there was resistance before. There was also a clustering of price activity here as well as here. So somewhere in this 4,000, 4,010, 4,100 region, you can see there might be some resistance. And then, of course, the summer highs up here would be the next level to watch out for.
Absolutely. Let's do that. Let's zoom out to the weekly basis on this S&P 500 chart, just to check our senses in terms of what the primary trend of the market might be telling us. And on a weekly basis, we're still in just relief rally territory, correct, Alex?
Yeah, we're still in a no-go. The weight of the evidence on the larger time frame tells us that we're in a no-go. Now, it's weakening as it did over the summer, but we are still in a no-go. Now, interestingly, you can see some bullish divergence on the weekly chart now. We're seeing lower lows here, higher lows in the oscillator, and we're back testing that zero line on heavy volume. And so we're going to look to see what happens here, but definitely some bullish activity happening on the daily chart, and we'll wait and we'll see if that gets confirmation from the weekly.
Absolutely. Now, the responsible approach to technical analysis is to take that top-down view. We reviewed the asset classes. Let's jump over to a chart of the TNX. So this is the 10-year Treasury yield here in the U.S. Deep cooling off today in terms of Treasury yields. Obviously, a reaction to the new inflation data coming in lower than expected, showing some mitigation of that runaway inflation that the Fed has been combating with these rate hikes. So from a trend perspective, Alex, I see the momentum oscillator, the GoNoGo oscillator, breaking below zero for the first time in months. From your perspective, how significant is that as a threat to the upward trend?
Well, it's significant, and you can see that in an ideal trend, we're going to have go colors, and all of these corrections are going to find support at the zero line. And so this time it hasn't. That is a threat to the go trend. Now, it's interesting. We try not to have an opinion too much, but it's interesting to follow the stories. And this day today is really coming out of the fact that investors are thinking that there's a fairly good chance. Now, I read about 75% chance of only a 50 basis point hike at the next one. So we haven't beaten inflation yet, but the sort of speed of inflation rising perhaps is a little bit less than people were expecting. So definitely the go trend still in place, a very weak bar today. And this is a threat to the go trend, yes, because it's saying that in some form we are seeing some overselling. So that's not what you'd expect in a go trend. So this is a concern, yes. And if you just look at traditional technicals, we're breaking below support there.
Yep.
So an interesting level here.
Absolutely. And how cleanly we can spot those areas of support and resistance on a chart without a ton of squiggly lines covering up all of that price action. Thank you for that, Alex. Let's switch our eye over to the US dollar index. We like to present that with ETFs on this show. UUP is the ticker symbol for the dollar index. Strong no-go conditions. Alex, talk us through this one.
Yeah. And again, if you've followed our show and if you're watching, you know how we like to read these charts. This go trend in the dollar should have found support at the zero line. We were talking about how it was a very extended squeeze. If you take out this dip into positive territory here, you can see how long this squeeze would have been. We reached almost a max squeeze here. We broke into positive, went back to zero, and then another max squeeze. And so that squeeze at that sort of extended level, coinciding with this sideways movement in price, all else being equal, if this go trend was to remain in place, we would have seen eventually a breakout into positive territory. It didn't happen. And you can see this leading indication that there's a real problem with this go trend as the oscillator went below zero and then rose back to retest it before rolling over then into no-go bars. So you can see that sort of the breakdown or the destruction in this go trend happening over the right side of the chart as you combine your analysis with the oscillator and what's happening in the trend. So this no-go started actually on Monday, and now this big gap down today. No real surprise if you've been following this chart.
Strength in the U.S. dollar, providing a lot of headwinds to risk assets, not just in this country but around the world. I actually just got back from India. We're gonna look at a couple of charts here before the end of today's show. But I want to invite everybody who's watching to join us next Wednesday, November 16th, for an exclusive StockCharts TV special entitled "Embracing Volatility: Optimal Trend Entry with GoNoGo Charts." We're going to dive deep into that GoNoGo squeeze, volatility compression as a signal for us, either in terms of trend continuation or reversal. And we're going to help unpack some of that investor behavior that's visualized so cleanly on a GoNoGo chart. Alex, switching over from the U.S. dollar, let's take a look at oil. The U.S. oil fund ETF USO, perhaps back in a go trend. What are we seeing here?
We've been talking about this one for a couple of weeks. We did re-enter the go trend. We've rallied. We saw a counter trend correction arrow here as the oscillator got overbought and came back. So a go trend in place, corrected against it, sort of almost back to where it started, and now at the zero line. So we're going to watch this. Very important to see if we find support here at zero again, which could give price the push it needs to then try to set a new high.
Absolutely. And if we jump that out to a weekly basis, I was talking earlier today on Money.net Live, a lot of conversation about this being a crowded trade, folks looking to participate in the upside moves in oil. From a longer term perspective, it seems like we've just formed a bit of a sideways consolidation, perhaps within that uptrend. Obviously, on the weekly basis, I'm seeing the GoNoGo oscillator riding the zero line from below. Pretty important inflection point to what could either be the end of that trend or the beginnings of a cup and handle formation in terms of our old school price chart price pattern analysis. Yeah.
It's definitely, if you look at our heat map that we pulled up at the very beginning as well, with commodities back in a go trend, there are a lot of people, I think, sitting on this chart waiting for direction, and I think that we've really seen a consolidation sideways, and we've now seen that reduced volatility as on a weekly basis the oscillator rides the zero line. And you can see when this happened before, that next break led to something significant. We'll see what happens here. We've been below zero, which told us this was a threat to the go trend. We could have perhaps been exiting positions in here after being involved with this move, and now we're sitting on the sidelines. And what we're going to need to see is the oscillator break back above zero, which would help us get to the color change back into a go trend if we were to get back into this trade. But of course, we'll wait and see. We won't predict. It will either break into positive territory and give us that signal, or it will get rejected by zero and allow the no-go to continue to develop. We'll have to wait and see.
Absolutely. So we've checked in on some of these macro indicators. Obviously, the new go trend in the S&P 500. A lot of investors that had record levels of cash, out of risk assets, and hoarding cash throughout 2022, looking for opportunities to deploy. And certainly, not looking to forecast, but understanding some of those macro drivers really playing to the advantage of risk equities. Let's look at the S&P 500, but get below the hood. Let's take a look at a sector RelMap of the S&P. So this is each of the 11 sectors of the S&P 500 relative to their benchmark. If you've been watching GoNoGo for a while, you've seen our love of relative strength charts and looking at this in terms of tactical asset allocation. In terms of style, even in this new bull trend, we are not seeing any sort of leadership from our growth equities sectors. So top panel, information technology, central. Second panel, the consumer discretionary and communications, those top three lagging a rising S&P 500. But where we're seeing the opportunity in the energy sector, financials, industrials, materials, and even healthcare and consumer staples continuing to lead. So a higher relative performance on a market that is just entering its go trend. Alex, anything that really stands out to you in terms of these trends and what we've seen from cyclical sectors?
No, I think if you'd have been following this rotation over the last couple of months, you'd have been well positioned to take advantage of that outperformance. It's been fairly consistent. The performance has been coming from these middle panels, as you said. Technology, communications weakening a little bit, so perhaps coming into line, but definitely at the moment the leadership is coming from in here.
Absolutely. As trend followers, momentum loves things, even in the very early innings. So as the market was still trending lower, if we're looking back into earlier October, we saw these cyclical sectors forming new leadership, outperforming a downward trending S&P 500, and now emerging as the new leaders in this new bull market with the new go trend. Alex, let's dive into a couple of these individual sectors, starting with the materials, XLB. And let's take a look at that price action on an absolute basis to understand better what we're looking at in this new trend.
Yeah. So as you can see here, we highlighted the go trend continuation icon when we were looking at this in our Monday morning note, because we were talking about that just now on the S&P, how we were seeing trend continuation in the new go trend. Well, we saw that trend continuation back on Friday of last week. Having found a go trend, we saw really strong support at zero on heavy volume, and that allowed us to say that the momentum had come back in the direction of the go trend for materials. So you can see that's just a little bit more advanced and further along than the S&P, and now we're really testing those summer highs. We weren't there yet on the S&P, so you can see how on a relative performance basis, materials quickly back to test those summer highs. And a little bit further ahead of where the S&P itself is.
Absolutely. So a break above those prior highs gives us a lot more upside room and room to run for the materials sector. As we know, in this approach, we look from a top-down perspective. We do the relative strength work at the sector level, and then we look at relative strength within that sector, looking at individual names. So Steel Dynamics Incorporated, one that we pulled out for institutional subscribers on Monday. Let's take a look at how that chart has played out, STLD being the ticker.
Yep, absolutely. So this is STLD, Steel Dynamics. And you can see the strength of this security within the industry. You were talking about how we've had that outperformance since October. Well, look at where the go happened on STLD. It happened sort of third week of October, and we broke above the summer highs fairly quickly. So you can see this now a step ahead of the materials sector, which was a step ahead of the S&P. So what we're looking at now for STLD is, given that we are above those summer highs and these levels here should be support, we're going to turn our eye to the oscillator that is riding the zero line, and we see a max go no go squeeze building up. So we are moved higher. We've corrected against that move higher. We can see sideways consolidation that was pulled out for us by the counter trend correction arrow. And now we're going to be paying attention to the squeeze. A breakout of this squeeze into positive territory would be a really nice sign. It would give us trend continuation, and it would tell us that we most likely will be attacking these prior highs and moving higher. So, and if you can see how this works, you can imagine when people talk about buying bull flag breakouts or anything like that, really, this is what we're after. We're after trend identification and then a low risk opportunity to enter that move. So we've got a go trend, which is raced higher, consolidated against the trend, and now we'll look for opportunity to enter in a relatively low risk way, and that'll happen when we see the oscillator break out of this squeeze to the upside.
Very well said. I mean, that's trend following 101 when we see momentum coming back in the direction of the prior defined move. So we're in a go trend and we see that momentum resurgence. That's really the opportunity to press your bets into those trades. We've got that confirmation that those are working. Alex, let's switch over to consumer staples, the XLP sector ETF of the S&P 500, another outperformer relative to the S&P 500. Also in a go trend on an absolute basis from this daily perspective. Yep.
A similar looking chart. Not quite, if I'm going to be critical, not quite as strong as the material sector. If you can see from this, we're not quite testing those highs from the summer. But what is nice is it's a clean retest of the zero line. And that's what we wanted to pull out this week on Monday was you can see how we've entered a go trend, we've cooled off, and we've cleanly retested those levels. And you can see that we have rallied back into a stronger go territory now.
Absolutely. And within the consumer staples sector, we looked at Albertsons, local grocery chain for those Americans who do their shopping. Let's take a look at Albertsons just to confirm this trend of a security within a leading sector group.
Yeah, so not a lot's happened here really since what we were looking at on Monday, but again, in play in that security within that sector in a go trend, testing the zero line. And we looked at this go trend continuation icon here, but we've quickly come back to retest the zero line. So we'll watch this one as well. We've moved sideways since entering this go trend, but we'll look for support here and see if that can give price the push it needs to get above these highs here.
Absolutely. Now, as investors, we all suffer from home bias. For those in North America that are just investing in U.S. and Canadian equities, totally understandable. But I have to say that looking abroad for relative strength has been kind of an interesting exercise here in 2022. So the last 10 years, U.S. equities really dominating the space, led largely by our mega cap growth names, the FANG stocks, if you will, from Silicon Valley. What's been interesting spending this last week over in India is that they have not suffered the same contraction and downward bear market that we have in 2022. They were flat on the year. So Alex, if you wouldn't mind, pull up the INDA and let's look at that relative to the SPY. INDA being the MSCI ETF for India. And if we look at that on a relative basis, we start to see sort of that long-term relative performance, and then that really accelerating through the summer here as India has taken hold. Interestingly, the Sensex right at par with prior highs, looking to break out to new all-time highs for the Sensex and the Nifty 50. Really interesting trip this week with the CMT Association. Great conference with the Asia Pacific Summit. A lot of important takeaways for both our team traveling from the West, as well as all of the attendees in India that are avid StockCharts users, Alex.
Yeah, good to hear. Good to hear.
Absolutely. So friends, thanks so much for being with us this week at the GoNoGo show. If you're watching this on YouTube, make sure you like and subscribe. Check out the GoNoGo Charts YouTube channel as well. And we will see you back here next week, certainly on Thursday, but also on Wednesday, November 16th for a StockCharts TV exclusive presentation, Embracing Volatility, the optimal entry with GoNoGo charts. Alex, until next time.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.